All right, friend, we need to talk because people are about to make a serious mistake out there. I keep hearing folks say, oh, the president promised no taxes on Social Security, so I don't have to worry about that anymore. And I hate to be the one to tell you this, but that's 100% incorrect. I know we all want to cancel our subscription to the IRS. Trust me, I've been trying for years. But here's the reality. If you're receiving Social Security benefits and you have any other income, you're probably still paying taxes on those benefits. And most people have no idea how this actually works. I'm Harry, and I've been helping families navigate Social Security and government benefits for a year. I've seen thousands of people get blindsided by tax bills they didn't expect, and I've helped people discover they were paying way more than they needed to. So today, we're breaking down exactly who has to pay taxes on Social Security, why these rules haven't changed since the 1980s, and what you need to do right now to protect yourself. Okay, let's dive in because this is important. Here's what we're covering. I'm going to show you exactly how Social Security taxes work, who gets hit with them, why the system is broken, and most importantly, what you need to do during tax season to protect your future benefits. Because yes, there's an important step that young people especially forget to do, and it can cost them thousands of dollars down the road. So let's go back to where this all started. The 1980s, the Greenspan Commission. Back then, they were trying to shore up Social Security for the future. They raised the retirement age. They made some other changes, and one of the things they did was start taxing Social Security benefits for wealthy retirees. Now, I personally disagree with taxing Social Security. That's my opinion. You already paid FICA taxes your entire working life, 6.2% from your paycheck, and your employer paid another 6.2%. 2%. So it feels like double taxation, right? You paid in, and now they're taxing what you get back. But here's what they did in 1984. They set income thresholds. If you made over $25,000 as a single person or $32,000 as a married couple, you'd pay taxes on your Social Security benefits. Back in 1984, that was actually quite a bit of money, especially in retirement. So this tax was really only supposed to hit the wealthy. Now, here's where it gets infuriating. Those thresholds, $25,000 and $32,000, were set in 1984. And guess what? They are now in 2025. Still, $25,000 and $32,000, they have never been adjusted for inflation. Not once in over 40 years. Everything else has gone up. Your rent, your groceries, your medications, even the minimum wage in most places. But these thresholds frozen since the Reagan administration. So what used to only affect wealthy retirees now affects regular working-class people who are just trying to get by. And here's the really frustrating part. Congress hasn't done anything to fix Social Security in 40 years. Not one major reform. And because of that, the Social Security Trust Fund is running out. In about 86 more months, that's just over 7 years. The trust fund is going to be depleted, and everyone's benefits are getting cut by at least 23%. Everybody. Doesn't matter if you're already receiving benefits, about to receive them, or won't receive them for another 20 years. That 23% cut is coming unless Congress does something. And don't fall for that line about stolen Social Security funds. Politicians love to say they're looking for the stolen money, and people eat it up. But the money isn't stolen. It's right there in the trustees' report. The government borrowed from the trust fund, but they pay interest on it every year. About 10% of your Social Security check comes from that trust fund interest. The problem isn't theft. It's that Congress refuses to actually address the real issues. Okay, so here's the good news. Probably 40 to 50% of Social Security recipients don't have to pay any federal taxes on their benefits at all. If Social Security is your only income, you're probably not paying taxes on it. But it all depends on your combined income. This is where people get confused. Here's how combined income works. Your adjusted gross income, that's all your other income, wages, IRA withdrawals, interest, etc., plus any non-taxable interest you earn plus half of your Social Security benefits. That last part is key. They only count half of your Social Security benefits toward that threshold. So if you're getting $30,000 a year from Social Security, they only count $15,000 of it. If you're filing single, combined income under $25,000, no taxes on Social Security. Combined income $25,000 to $34,000. Up to 50% of your benefits may be taxable. Combined income over $34,000, up to 85% of your benefits may be taxable if you're married filing jointly. Combined income under $32,000, no taxes on Social Security. Combined income $32,000 to $44,000. Up to 50% of your benefits may be taxable. Combined income over $44,000. Up to 85% of your benefits may be taxable. So let me give you an example. Let's say you're single. You get $24,000 a year from Social Security and you work part-time making $10,000. Your combined income is $10,000 plus half of $24,000, which is $12,000. So that's $22,000 total. You're under the $25,000 threshold. So you won't pay any taxes on your Social Security. But if you got a raise and made $16,000 instead, now your combined income is $28,000 and suddenly up to 50% of your Social Security becomes taxable. This affects so many people. Working retirees, you're trying to supplement your Social Security with part-time work and you get taxed for it. Widows and widowers. When your spouse dies, you lose one Social Security check, but you still have to pay the bills. Many widows take on work, which triggers taxes on their benefits. People who saved responsibly. You put money in a 401k or IRA your whole life. And now when you take withdrawals, it pushes you into these tax brackets. You literally get penalized for planning ahead. Disabled workers trying to work. If you're on Social Security disability and working within the allowed limits, that income can cause your benefits to be taxed. Veterans. Many veterans supplement their Social Security with VA benefits or part-time work and end up paying taxes on their Social Security. The people trying hardest to stay afloat are the ones getting punished. Now, here's something most people don't know, and it's really important. Taxation of Social Security benefits actually helps fund Social Security. When you pay taxes on your Social Security benefits, the IRS sends that money back to the Social Security Trust Fund. In 2024, about $54 billion came into the trust fund from people paying taxes on their benefits. So here's the dilemma. Yes, these taxes are unfair. Yes, the threshold should be updated, but if we eliminate taxes on Social Security completely, which the president has talked about, that's $54 billion less going into the trust fund every year, which means instead of the trust fund running out in 86 months, it runs out even sooner. And instead of a 23% cut, it might be a 30% cut. That's why this is complicated. I don't think Social Security should have been taxed from day one. But now that it is, removing that revenue stream without replacing it makes the whole situation worse. And just to make things even more fun, some states also tax Social Security benefits on top of the federal taxes. 9 states do this: Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. So if you live in one of those states, you could be getting hit twice: federal and state taxes on the same money. Okay, this next part is critical, especially for young people, but really for everyone. Once you file your taxes this year, there's an extra step you absolutely must do. A few weeks after you file, go to ssa.gov and set up your My Social Security account if you don't have one already. Then log in and check your earnings record. You need to confirm that what you paid into FICA, that Social Security tax from your paycheck, actually got credited to your Social Security account correctly. Sometimes employers make mistakes. Sometimes Social Security numbers get transposed. Sometimes earnings just don't show up. And if you don't catch these mistakes early, they can cost you thousands of dollars when you retire. I literally had someone on my show yesterday who finally got their earnings corrected after fighting for it, and it increased their monthly benefit by $400 to $500. That's $6,000 a year. But it took them a long time to fix because they didn't catch it when it happened. If you wait until you're 62 or 67 and filing for retirement to discover your earnings from your 20s or 30s weren't recorded correctly, it might be too late. You might not be able to prove what you earned. The company might not exist anymore. It becomes really hard to fix. So, make it a habit. Every year after tax season, check your Social Security earnings record. Make sure everything is correct. It takes 5 minutes and could save you thousands of dollars in the future. In the old days, Social Security used to mail out statements every year showing your earnings history, but Congress stopped that because it was too expensive. So now it's your responsibility to check online. Look, the system is broken. Those 1984 thresholds should have been adjusted for inflation years ago. Congress should be working on real solutions to shore up Social Security instead of playing political games. But until that happens, you need to protect yourself. Know your numbers, calculate your combined income, and figure out where you stand with those thresholds. Consider Roth conversions. If you have traditional IRA money, converting some to a Roth over time means those withdrawals won't count as taxable income later. Time your withdrawals. If you don't have to take money out of retirement accounts yet, consider delaying until you have to. Check your state. If you're in one of those 9 states that tax Social Security and you're able to move, it could save you thousands every year. Get professional help. A tax professional who specializes in retirement can help you create a strategy to minimize your tax burden legally. Most importantly, check your Social Security earnings record every single year. This is non-negotiable. Make it part of your tax season routine. I know taxes are boring and complicated, but this is your money. Money you worked for your entire life. Money you need to pay for food, housing, medication, and everything else. Congress has been kicking this can down the road for 40 years. The trust fund is running out. More and more people are getting pushed into these tax brackets because the thresholds haven't been updated. And the people getting hurt the most are the ones who can least afford it. Widows, disabled workers, retirees working part-time, veterans, people who tried to save responsibly. You deserve to know what's happening so you can plan accordingly and protect yourself. Here's what I need you to do. First, hit that subscribe button. I'm going to keep covering Social Security changes, tax updates, and benefit strategies as they happen. You need to stay informed. Second, go check out my other video on 10 Social Security, SSI, and SSDI updates January 1st, where I share even more strategies to make your benefits go further. Third, share this information. If you know someone who's receiving Social Security or will be soon, send them this video. If you have kids or grandkids who are working, tell them about checking their Social Security earnings record. The more people who understand how this system works, the better off we all are. When you share this information, you become part of our team, and we're now over 1 million strong. Fourth, leave a comment. Did you know about these taxes? Have they affected you? Are you going to check your earnings record? Let me know. And finally, once you do your taxes this year, don't forget, go to ssa.gov. Log into your account and verify those earnings. It's one of the most important 5 minutes you'll spend all year. Thanks so much for being here, friend. We're all in this together. Knowledge is power. And the more you understand about how the system works, the better decisions you can make for yourself and your family. I'll see you in the next one. Take care.